Hey guys, this video is dedicated to those of you who just started trading or just started investing, and you might be a little bit dazed or a little bit confused about what exactly are you doing, because online there are a lot of people saying that trading is all about luck and trading is all about skill, and this is basically two very interesting separate class or school of thoughts, right? We have on the one hand, we have, Random Walk on Wall Street. Essentially, you don't really need to read this book. The summary of this book is as followed. Trading is essentially like you're walking on the street randomly. You don't really have we have no idea as a trader, as someone who's in the active market, we have no idea whether the stock's actually going to go up or go down. All we know is for majority of the time, where majority of the players in the market believe that in the majority of the times, the stock or the Nasdaq, the U.S. stock, society or market in general is gonna go up more than go down. Where we're talking about the frequency. However, if we pick any stock, it's like dropping a needle to the ocean or basically throwing darts at blindly. You have no idea whether a stock will go up or go down. However, you would know that that book came out years ago. But right now, with quantitative method, with quants, with more data, with more methods going up, in the market, with more mathematic methods coming out on, to open our eyes, and when you trade more and more, you can take this as my reflection after trading about 6 years, and I evolved from selling puts all the time. I evolved from winning all the time. I busted a couple of accounts. I made some money. And I think this is time to sit down and reflect on what I actually have learned over past few years. Well, I think I didn't learn that much by just selling puts all the time when the market is going up. You know, you got you can pretty much double your money in about 2 months if you play it, buy the book, selling puts all the time, and you sell weekly puts and maybe buy some calls along the side. But by doing that, you're actually exposing yourself to a lot of risks in the market, right? And then later on, when you get a little bit too aggressive, when you start doubling your money in a very good market condition, it almost feels like you're on top of the world. You're very confident of whatever you were doing. And, all of a sudden you get really, I don't know how to describe it, really confident. You go out to talk to women. You have like the extreme amount of confidence. I think at some point you realize that money actually buys a portion of happiness, and money also buys the clear psychological dominance over other people. When you walk on a street, when you know that you have a handful of options and all of your portfolios are going green, you almost feels like you're on top of this world. You're like you own this place. Like when you go into a place, you almost feels like, oh my god, I just own this place. I don't care. I'm gonna keep rolling like this. But this is when you actually have to sort of slow down and ask yourself and be humble and nimble towards market. If your method or if this technique that you've been using has been working for you, and you're not the smartest person in the world, some of you might think that, hey, like DD, or for those of you who know my real name, it's gonna be like, hey, like we know that you're, even if you're in class or in a company or whatever, it almost always feels like you're the smartest person in the room. But I gotta tell you, a lot of times when you trade or when you invest, let's just say it's 70% skill, 30% luck. But at the same time, you cannot let your emotion overruns you. When you're on a high rolling spree, or when you are yelling, let's just say 10% per week, and it's compounding, at one point there's gonna be a big shocker, because the market wouldn't go up all the time and it wouldn't go down all the time. And when you're in this killing spree, you just have to, or grab yourself, a cup of ice water, or if you have a daughter, a husband, a wife, or someone who can keep constantly calling on your bullshit, or basically just tell you, hey, slow down a little bit, right? Don't always like sit yourself on a high horse, because that's the moment where it's gonna hurt you the most. You're gonna keep doing exactly what we've been doing for a long time. But a lot of times when the rule of the game doesn't change, but the climate of all the other players our thinking changes. This is what we call the behavioral economic side, right? The behavioral finance side. You will see volatility start to hit back at you. You will see essentially what's going to happen is when you're trading, there's going to be a lot of unexpected things happen. This is why in business schools or in any trading schools, we teach or they teach you to not expose yourself to the same kind of risk altogether. That means you have to diversify. But when you diversify, that also means that your total consolidated total return is going to decrease. Because by diversification and by hedging or de-risking your portfolio, you're essentially buying into all these mediocre stocks or the commoner stocks, or you would, when you're a rookie, you would basically short one stock and doesn't have any contingency plans. But when age starts to sneak up on you, you realize that, hey, if you are still 20 years old, you can go work a minimum wage job, and you can work a couple of months, get a couple of grand, and throw it into the option market again. And if you're good, it's like playing poker, right? A lot of people are saying like good luck on a poker table. A lot of times, even though sometimes the luck really is a part of the huge determinant of how much you're going to return on your poker table, but in reality, the skill really matters. And when you really master the skills, you're really literally just playing with yourself. You're playing against yourself. You're playing with yourself. You're playing sort of constantly against your own flow, because when you're making those bets on the poker table, it's the same thing as when you're making those hedging bets, these opposition bets, these multi-leg strategy on options in the stock market. And you truly would learn, I think, let's just throw away of all the mediocre stuff, right? A lot of people just not cut out for this, so they're probably gonna lose their money in like the first 2-3 months or whatever, and they will never come back, right? They might not have the luxury to come back, or it's too much risk for them, and they just decided, hey, this is not the thing for any of you. But for those people who are watching, who stay in this game for a long time, and you've busted a couple of account, if you trade futures or trade anything with leverage, you already know that, hey, you're gonna at one point in your life you're gonna bust your account, as early as $2,000, as early as $20,000. Maybe you busted 200K and you just can't recover. But before you go and bust your first account, here's one thing that will tell who just started this. No matter what your starting stack is in the stock market, a 1K, 10K, 100K, or if you're high roller, you go a million, is you gotta understand what would really hurt you. We're playing with real money here, okay? We're not playing with paper money like pussies, open up a paper account on Fidelity or Webull, whatever, and trade it. Real money really hurts, and you can only learn from real money. You gotta figure out is, hey, how much money am I prepared to lose here that won't kill me, or it won't have a huge psychological effect on me? And you have to prepare for losing more than that, maybe twice amount of that money, right? And if you're lucky, you have your investors that really loves you, or maybe friends, fools, or family, or whatever, that willing to stake you and willing to drag you through this journey, and you gotta be really grateful for whatever they do, and make sure that if you lose that $5,000 that somebody gave you, make sure that next time you learn from what you learn, and do not expose yourself to the same kind of risk ever again. All you have to do is just be smart about it. There's a lot of way to trade. There's a lot of rules of the game. You can play macro. You can play individual stock that that you have an edge over the rest of the market. Either you have solid fundamental understanding of the market, the business, or this sector, or you have fundamental understanding of these fundamentals where you can play the long game. You can keep buying into it, and eventually its true value is gonna come, right? So what you want to do is to find your style and stick with it. And once you stick with it, and you stick with it for a long time, there's gonna be a payoff. It might not be 200% payoff. It might just be a 20% year-to-year annual return. It's really good. For those of you who think you make 100% off of $1,000, it's a lot. But if you have $2 million and if you only make 20% a year, or if you just make 10% a year, that's a lot of money. So when your stack size increases, the way how you think about money, the way how you think about allocation is going to drastically change. And a lot of you might think this video is for nothing, it's just me mumbling, jumbling. But for those of you who've been here for a long time, and for those of you who will be here for a long time, for those of you who will trade for a long time, this is going to be something that you will never buy or never see online or on YouTube. This is a reflection, but this will get you inside of a head of a future really good trader, because essentially, if you understand what I'm trying to say here, you're saving yourself a couple of years, and you might be saving yourself on a couple of grand of starting out money, and maybe saving yourself from busting out. Maybe you're destined to bust 10 accounts to be at to be at some level that's gonna be you're gonna be extremely profitable. And after you watch this, it probably will only take you half of that amount, because essentially what you really need to tell yourself is, no matter how good or how much return you're making right now, it's only temporary. So once you hit a certain milestone that you're gonna hit, like 100% return, 20% return, slow down a little bit, change your strategy a little bit, stick to a style, but change your strategy a little bit. Understanding what is changing in the active market and adjust your portfolio allocation along with it. The market is ever evolving, and none of us can ever figure out exactly what is going on. Okay? So be humble. I guess this video is just out there for you to watch, and be humble. And if you like those kind of videos, smash the like button and subscribe. But for the most part, this video is probably for me. I'm gonna mark it as an ode to 5 years from now, or hopefully 5 years from now, I will come back and watch this video, and I will learn a little bit more about myself, a little bit more about my mental state, and see you guys on the upside.